Welcome to Driving Alpha, where we feature our friends, the outperforming investors who demonstrate their path to driving alpha or outsized investment returns. We're Alpha Partners, where we partner with 1,000 early-stage venture firms as their opportunity capital to invest in their best companies. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.
Hi, I'm Steve Brotman, managing partner at Alpha Partners. Welcome to Driving Alpha, where we uncover the visionaries and values that shape the future of venture capital. Today, we're joined by Brad Feld, partner and co-founder at Foundry Group and a figure whose impact on early-stage venture investing and tech entrepreneurship spans nearly 4 decades. Not only a builder and investor, Brad is a prolific author and thought leader. His books, including Venture Deals and Startup Communities, and his long-running blog, Feld Thoughts, have equipped countless entrepreneurs and VCs with tools and frameworks to succeed. He actually just published his latest book, Give First, The Power of Mentorship. I encourage all listeners to pick up a copy, and we'll chat more about what's in the book in a bit. Brad's journey is anchored in academic rigor and entrepreneurial spirit. After earning both his bachelor's and master's at MIT, he launched Feld Technologies while still a student. That startup was acquired by Ameridata and fueled Brad's early career as a serial founder, angel investor, and executive. Brad quickly scaled his influence in venture capital, co-founding Mobius Venture Capital, and ultimately Founder Group in 2007, which he co-founded. At Foundry, Brad helped grow a portfolio that's defined by multiple tech areas. Along one of his best-known legacies is the creation of Techstars, one of the world's top accelerators. Brad was an early investor in transformative companies like Harmonic, Zynga, MakerBot, Fitbit, and Rover, among many others. His investments and mentorship have directly contributed to startups raising billions and pushing the boundaries of what's possible in consumer tech, health, SaaS, and hardware. Get ready for an in-depth conversation with Brad Feld, a true architect of modern venture capital, on building enduring communities, investing through market cycles, and what it really means to drive alpha in tech and beyond. Welcome, Brad.
Steve, thanks for the lovely intro, and congrats on everything you've done with Alpha Partners. It's been pretty awesome, and delighted to be here on the Alpha podcast.
Thank you, Brad. It's an honor for us to have you, and flattered that you're taking some time this afternoon to chat at a pretty interesting time in the venture universe. You know, as I didn't realize you're operating on your 4th decade. That must be quite a feeling. Do you feel like you got to the top of the mountain? Or are you at the bottom of the mountain and looking up at another mountain?
Well, I turned 60 on December 1st, so I'm definitely feeling old and increasingly irrelevant, which is kind of a fun feeling. I've been sort of contemplating the length of time that I've been doing this for a while, and one of the things that occurred to me maybe about 5 years ago was that how I spend the last third of my life, whatever that's going to be, what does it compare to the prior third? So my wife, Amy Batchelor, and I really talk about this notion of third thirds. And, first third, you're really sort of growing, from a baby and developing a lot as a child, sort of forming whatever your views and values, having your early experience, formative experiences. And then you have this sort of extensive time period where you're sort of deep in work, career, building a family, whatever that means. In our case, we didn't have kids, so we approached that very much around building a relationship and building a life together in the context of what we did with each other and what we did with others. And then sort of understanding that there is a third third. And for many people, I think the third third is characterized as something I describe as holding on by your fingernails to power and relevance. And we see it, especially today in politics and, in Washington, D.C. with, people who are, at the very ends of their lives, still continuing to try to shape and form how the world and society works. From my frame of reference, I don't feel that way about myself. I feel like that's not my role for the last third of my life. I'm very much fascinated by wisdom traditions such as Buddhism. And, in Buddhism, there's even this sort of quarters where the last quarter is becoming an ascetic and sort of wandering into the woods and really disappearing. I don't think I become an ascetic, but the dynamics of how I'm thinking about, the rest of my journey, whether I live for a day or live for 30 more years, is very much different than the arc that I've been on the last 30 years. But I'm still figuring that out as I wander into being 60.
All right, that's fair enough. So not quite sure what that might entail. Some people have a third act.
I definitely don't have another act. So one of the things I'm very, very clear on is that a venture fund takes a long time to wind down. And having been through the experience of the last fund that we raised at Mobius lasting for 22 years and being an LP in a number of funds that I would say are now about to be 18, 19, 20 years old, I'm very, very clear that the fund that we raised close in 2023 that we announced early 2024 would be the last fund that Foundry would raise, that fund has a long tail in front of it. And so I'll be doing this work for quite some time, very comfortable with that. I like doing the work that I'm doing at the way and stage that I'm doing, which is different than yet another fund, yet another series of new investments, yet another series of companies at the early stage that are going to take a long arc to grow. And, being able to settle in, working on what is a very large portfolio. We have about 80 active companies and about 50 fund investments across all the different funds that we've raised that, have a significant both, amount of current and future value in front of them. And many of those are large scale companies where we can really be impactful on whatever the ultimate path is. So that's my next act. I'm not going to be a politician. I'm not going to be a professor. I'm not going to start a new, set of things. I'm very much enjoying that. And one of the things that's been cool about what we've done with Foundry and, what I've been doing for a long time as an actual LP and other venture funds, I've been investing personally in venture funds since 1997 when I made my first investment as in an entrepreneur side fund at Highland Capital Partners, their Fund 3. Part of the arc for us has been investing in lots of first-time funds and lots of spin-out funds or funds that were for, new GPs. And it's been really a joy to not just be able to be a board member and support founders and leaders of companies as a board member and investor, but also be supportive of new fund managers as an LP, whether or not we're on the LPAC, whether or not we're major LP, but be able to be, a mentor in that context and whether listened to or not, share some of the experiences we've had, good and bad, in terms of firm building.
Interesting. Sort of a meta PC role. Are you going to continue doing that?
Yeah.
Invest in
Yeah.
funds?
I mean, one of the things that gives me great joy in a work context is, and this is part of why I wrote this book, Give First, The Power of Mentorship, to sort of talk about both my own personal philosophy around how I engage, which is a give first philosophy, but also sort of talking about how effective mentorship works, because I've learned a lot over the years, both through Techstars and through my own experiences about what can be effective as well as what's not effective. And there's an enormous amount of behavior, in venture capital, in the context of angel investing, entrepreneurship, peer-to-peer dynamics with founders around mentorship that's just not effective. But there's a lot of techniques and approaches that can be very effective. That's actually reflective, right? It's whatever's effective from a mentor perspective is also effective from a mentee perspective. So it's not a singular dynamic. And back to what gives me great joy, I love and get enormous pleasure from being able to be helpful and additive to a founder where, I consider those fund managers who have created their own firm also founders of their funds, because a fund is a business where, I'm helpful, I'm additive as whether it's a, clearly defined role as a mentor or just talking from my own experience. And over a long period of time, seeing that play out in useful ways, whether or not, again, as a mentor, the key thing you have to understand is that you're providing data, not answers. You're not telling the person what to do. You're not being directive. And if they choose to do something different as somebody that's playing a mentor role, that has to be okay. And for me, it's just really for people that I enjoy being with, spending time with, working with, it's great satisfaction. One of the contrasts to the last 40 years is that as you're an investor investing in lots of new things, you don't know yet which people are the ones that you're going to really enjoy spending time with. You don't know yet whether the things are going to be successful or not, the companies themselves. And so developing those long-term relationships and being able to look back and then select from the long-term relationships which ones to really put energy into on a go-forward basis is pretty satisfying.
Who, in terms of, you mentioned mentorship, and I think there are definitely a lot of ways to approach it. So a book today is super helpful, especially because the amount of sort of experience set that you've had over those years is incredibly valuable. Did you have mentors in your experience with Inventure specifically, or did you glue your own? Like, you founded Mobius pretty young. Could you maybe share some of the mentors that impacted you?
In venture, it's very interesting, that arc. But there's some mentors that really impacted me even prior to venture. I talk about a couple of stories in the book. One of the things I like so much about the construct of effective mentorship is that in providing data, a lot of what the best mentors do is tell stories. Those stories don't have to be wrong ones, but they talk from their own experience to illustrate the point we're trying to make. It's something I learned many, many years ago in my early 20s when I was part of a very early member of something called the Young Entrepreneurs Organization, which is now called Entrepreneurs Organization. It's a cousin of Young Presidents Organization. EO Colorado, which I was a founder of, is now about to celebrate its 30th anniversary. I mean, it's pretty remarkable to be, doing stuff now for 40 years and see some of these things with this kind of long duration. I was on a call yesterday as the current leadership of EO Colorado is organizing the 30th reunion and trying to track down like all the original members. It was fun to sort of reconnect a few people that I have regular contact with, some that I don't. And one of the things I learned from this was this value of telling stories from your own experience to illustrate a point. It's something called Forum, that is not the Werner Erhard Forum that came from Hippy Dippy Land in California, but
IPO, right?
well, Forum came from YPO, and it's a very structured approach that I learned from YEO. In that, I'll just tell a couple of stories. One was very early, even in my teenage years, a guy named Charlie Feld, who I refer to as Uncle Charlie because he's my uncle, he's my dad's younger brother, was an incredibly impactful mentor on me as I was being introduced and learning about computers. I started playing with computers when I was a 12-year-old. And the first person that connected me with computers in the 1970s was Charlie. And there's a nice arc through that. Another mentor of mine who became the magic trick in mentorship is to be a peer between the mentor and the mentee. So that happens over time. It can happen very quickly, or it can happen over a long period, or never happen at all. In my case with Charlie, it happened over a long period of time. In another case with the guy that bought my first company, Len Fassler, who was partners with a guy, Jerry Pock, who two very successful venture funds, Pequot Capital, which then spun off and became FirstMark. I would consider Jerry a VC mentor, somebody who sort of in that context, when I was sort of in my formidable years, early being a VC, he was also becoming a VC, but after having been, the founder and co-chair of several public companies. So there's a lot of dynamics in that. Len, on the other hand, was a mentor in the context of starting companies. We ended up starting a couple more businesses together after they acquired my first company. And I had a moment with him where I learned what pure mentorship was, because we were at a dinner and I think we had just bought the company that we were having the dinner with, or maybe we were trying to buy the company. And in those dinners where you're having a conversation, 15 people or whatever, and you kind of have someone you're really emotionally close to and you hear them at the other end of the table and your ear is always kind of hearing what they're saying a little bit. That was me and Len. Like, I was always kind of overhearing whatever conversation he was having. And I heard him say something like, I'm learning more from Brad, or I'm learning so much from Brad, something like that. And I basically stopped my conversation. I turned to him, I said, Len, what did you say? And he repeated it. And I said, Len, that's bullshit. You're an unbelievable mentor. I learned so much from you. This is in front of, a dozen people or whatever. And he said, no, Brad, yeah, I know. I hope that's true, but I am learning so much from working with you and being with you and just experiencing different ways of thinking about things. Len was 32 years older than me. So it was a different generational dynamic, and it was really powerful. So he passed a few years ago, but I would count Len as one of those critical early mentors. In venture, I mentioned Jerry Pock, and Jerry went on to create FirstMark with Rick Heisman and Miss Jane. Like, that's been just an unbelievably successful company, Steve, or organization, Steve, I'm sure you know because of New York. And I saw meet recently at a thing in Toronto, which was really nice and fun to reconnect after a while. Jerry and I are still regularly in touch. Another early mentor that was really critical to me, who is a good example of a quiet person in the background who has influenced so many people, is Ron Fisher. I met Ron when the Mobius Venture Capital essentially the name for a fund that was originally spun out of SoftBank, or sponsored by SoftBank, is a better way to describe it, called SoftBank Technology Ventures. That was the fund that I was a co-founder of with a couple of other people. And it was created in 1996. And Ron was vice chair of SoftBank and was the administrative partner for SoftBank and the fund. So he was kind of the, full-time SoftBank person paying attention to what we were doing as our sponsor. But Ron developed special relationships with everyone. I mean, he's an amazing, amazing person. My relationship with him, I think maybe because I was so young, I was very comfortable in the things that we worked on together. And we worked on a number of things together where I listened really, really carefully to Ron in those early days. And over time, I continued to come back to Ron in moments where I was confused or I was disoriented by what was going on, as the internet bubble especially accelerated to its peak before it burst. And then as, the internet bubble burst, Ron was very now engaged in all, investing activity that SoftBank was doing. They'd raised a separate fund called SoftBank Capital Partners. That was part of why we renamed the thing we were doing Mobius Venture Capital, because the two things were getting confused all the time. And SoftBank was a major LP in those funds. But I remember multiple times going back to Ron at different points in time, for advice. It translated into something very important, which is Mobius decided not to raise another fund when our investment period ended in 2005. We actually tried to raise a fund in 2004. As a team, the internet bubble was still, tech companies were still a disaster. It was very hard to raise a fund. And we had a very unsuccessful effort to try to raise a fund. The Mobius funds were fund 4, 5, and 6. And when I look back on it, it feels very disingenuous that the first fund was called SoftBank Technology Ventures 4. There actually were legitimate fund 1, 2, and 3s that were basically SoftBank capital. And fund 4 was the first kind of broad outside capital fund that we raised. But, when I think back on it, the team had been doing investments. It would sort of come together really quickly, but it was sort of a different thing. The fund we tried to raise was fund 7. And the first fund we did, fund 4, was very successful, had great returns. The fund 5 that we raised, which is a 99 fund, was an absolute debacle. And I've been in LP and worse funds, so it was not the worst performing fund in history, but it was very poorly performing fund. The 2000 fund, was still young, but it had been invested into the teeth of the internet bubble, like so many other 2000 funds. So it wasn't very mature yet and had a lot of write-offs early from the 2000 and 2001 time period. So, we tried to raise a fund. We were unsuccessful. And we'd scaled down this thing that had really scaled up to something very large. And as part of that, there was a small group of 5 of us that were still the partners. I was the only one of the original 4 partners that was still part of the thing. And the group of us got together and just decided, as a team, it doesn't make sense for us to try to raise another fund on the platform. As part of that, I committed to the LPs, but also committed to SoftBank, which was effectively Ron, that I would manage this through the end of the life of the fund, which was 2022. If I had realized that I would be managing this thing from 2022, I probably would have taken a different approach, but who knows? But the power of that kind of level of relationship, I don't think I would have committed to that if I hadn't had Ron as somebody that I so deeply respected and would do anything for. And I put this in the category of do anything for.
Amazing. I was just thinking about all the people that I know who sort of effectively spun out of SoftBank. Is there like a list? Maybe
there's probably a long list. It's a fascinating dynamic of looking back, at that time period. And the SoftBank arc in the contemporary time period was also fascinating, right? When the Vision Fund spun up. And, for me, having lived a similar story in the 90s, different dynamics at some level, and certainly around how technology investing was working at the time. And SoftBank was much better known when the vision funds spun up than in the 90s when SoftBank, effectively Masayoshi Son came to the US, or didn't come to the US, but started investing in the US by buying digital media properties in 95. Ziff gave this, where Eric Capot came from. And Eric, of course, had, gone on to not just with SoftBank Capital Partners, but then with Ben Lehrer, create a really significant firm. The dynamics of Davis was one. I was searching for Comdex was the other one, the big trade show business. And then, of course, the famous sort of Sohn story is showing up and committing to buy 30% of Yahoo for $30 million pre-IPO. And everybody's like, well, that's crazy price, $100 million for this stupid company with exclamation point at the end of it. So in those dynamics, in some ways, the vision fund for me, when I was watching it from the outside, because I wasn't involved in it, was really the same experience with just 2 extra zeros at the end of it, right? Instead of $1 billion, which at the time was considered ludicrous for venture fund, $100 billion now considered ludicrous for venture fund, and sort of watching and observing how those things played out.
But it was ludicrous. It turns out.
Yeah, of course, history gets to write whatever story it gets to write. I mean, I think Sohn is amazing. I mean, Moss is, who I don't think he could pick me out of a lineup at this point in time. Maybe, I don't know. We've met a few times, and I've been in the room, a number of times where there were very interesting conversations going on, and I heard the, I'd like to buy 30% of your company line, enough times to recognize that as a shtick. One of the things that was amazing to me about Masa was that it felt like, and a close friend of mine later told me this story, it felt like every day Masa woke up with a blank piece of paper. Like he didn't have any of the wins or losses from yesterday coloring his thinking. He was able to think every day fresh, which is extraordinarily difficult to do. You think about some cost fallacy, which is as good as you are. I mean, I've fallen into that trap a number of times with companies. You think about just the emotional ups and downs when things are going up, how everybody is either, talking about how amazing you are or trying to tear you down by throwing things at you. And then when, you're on a down cycle with whatever you're doing, how everybody criticizes and takes pot shots at you and tells the world how stupid you are in the articles about what you've screwed up. But it's part of life, and it's part of the hero journey, right? And, Joseph Campbell wrote extensively about that. And there's nothing new to see here. Like, it's just playing out again and again. But he's a unique character that's able to kind of continue to, carry through all of that with unwavering enthusiasm for the things he's doing, which is hard, very hard to do.
Well, the older bearded mentor is pretty strong in that hero's journey, right?
Yeah, the hero's journey has that bearded mentor. I'm very comfortable with Mark Hamill. I'm definitely Star Wars, not Star Trek, for the science fiction fans. And any science fiction fan knows you have to be Wars or Trek. You can't be both. I'm definitely Wars. And when Mark Hamill disappeared and said, "I'm done, goodbye," I sort of embrace a part of that.
So hold on. Star Wars, Star Trek. Why is that? Why Star Wars, not Star Trek? Is it that different?
Yeah, it's a childhood experience. So I must have been like 10, 11, 12. I remember going to it with my dad. And I remember I walked out of it, just my mind was blown. And I said, "Can we go watch it again?" And he said, "Not tonight." And then I think the next day or the day after, he let me go see it again, this time without him. He didn't want to go see it again. And I went and saw it again. And then I went and saw it again. I don't go see movies 2 or 3 times. And Star Trek was happening at the same time. Of course, it was, it was sort of the childhood. I don't remember where it was in the time arc. And I didn't watch TV much as a kid. So as a teenager, my brother and I got an hour of TV a day. That was all we were allowed. And I gave my hour to my brother, which was not a thing. So I just wouldn't watch my hour. He still only got an hour, even though I said he gets mine too. So I didn't watch much TV as a kid. And so I kind of missed Star Trek as a kid. And so in college and then after college, when, I started watching Star Trek, there was this interesting arc where I really bought into is the wrong word. Really, it was enthusiastic about the Star Wars world building and mythology. Although, like every good Star Wars fan, like the Jar Jar Banks character, and there's definitely some crappy early Star Wars, but I never really got connected to those characters in Star Trek. And so, I'd watch the movies, and I had a friend who's watched every single episode of Star Trek, every single season, 10 times. Name's Warren. If Warren's listening, Warren Katz. If Warren's listening, he'll smile. And, we'd sit around and he'd watch Star Trek at night when I would hang out at his house when I'd go to Boston. I stayed with him and his wife, Alana, a lot. And I'd sit there with the laptop on my lap and I'd type on my laptop and he'd watch Star Trek.
I was going for something a little deeper. It just seems like
Nope. All you got was, well, the deeper thing is the things that form our viewpoints as kids.
right. I mean, some people go even deeper and say Star Wars is capitalist and Star Trek is communist, socialist.
Nah, I'll take a different approach. I think Star Wars is easier because it's more clear good and evil, and Star Trek is not as clear around good and evil. And in Star Wars, you really have this very stark team blue versus team red, which, by the way, sort of fits in our world today, versus Star Trek, which has a much broader arc around sort of what's happening in the world building. And so, for me, I think this is actually, I had never thought of this. I think maybe Star Wars is a little simpler thing. And so maybe I'm just being a simpleton by liking Star Wars more than I like Star Trek.
No need to dwell. But have you seen the new Superman movie?
I haven't yet. Is it any good?
I asked my kids and they're sort of thumbs down. It's like, what? You judge by the trailer? How can that be? How many times can they refresh that? It's, talk about mentorship.
That's actually, it's funny. That's a metaphor for companies. Is if you look at companies over a long arc, and I'll describe, you asked me mentors in venture capital. I'm gonna talk about two other people in this that are what I would call peer mentors again, Fred Wilson and Jerry Colonna. So Fred and Jerry were starting their investing activity at the same time, and we overlapped through the SoftBank experience. SoftBank was one of the sponsors of their fund, Flatiron Partners, and then with Chase Capital. And now I ended up doing investments with both of them, becoming good, close friends with both of them, but in different ways. And today, our relationships are still close. I'm extremely close friends with Jerry. To the extent that you can have a non-romantic soulmate, I would say that Jerry is a non-romantic soulmate of mine. But in the 90s, we were all sort of figuring this shit out together. And we learned a lot, both from successes and failures that we shared. We learned a lot from, experiences and different things that we were doing at the same time. And there was one thing that I remember that was so foundational to Jerry's investment approach, which was this phrase, the analog. And I think it's kind of been lost in the seeds of time, but it's a useful one, which is in the internet bubble, in the first iteration of it, Jerry and Fred's, one of their lenses was, what is the digital analogy? They'd see a digital thing and they'd say, what's the non-digital analogy of this? What's the analog analogy, which then became shortened to analog. And so whenever somebody would say, oh, we're going to do an online classified ads business, like the analog, of course, being the newspaper classified ads business, or we're going to do a thing to advertise your business on the internet, or we're going to do a thing so that people can chat with each other, or we're going to do a thing so that you can buy and sell tchotchkes on the internet, always looking for the analog. And from that, of course, came a bunch of businesses, some successful, some not. But then an interesting thing happened in probably 2007, 2008 time period, and it was very useful for a moment in time, which was many of the ideas from the internet bubble were correct. They were just too early. And what you needed was broadband, you needed bandwidth, you needed mobile, and you needed much, much better browser infrastructure and coding. You need to be able to build, the thing that became starting as Ajax and then became Web 2.0 and, HTML5, and sort of the evolution of the tooling needed to get there. Sort of this API forward approach. So all of a sudden the web services were separated from the application. The user interfaces could really become way more robust, but then the web services were really separated and you could do that at scale, which of course Google had demonstrated with their horizontal scaling of their infrastructure that now everybody is starting to adapt. And so it was kind of fun to have these conversations about, okay, yeah, that's working. We tried to do that in, 1997 and it didn't work. And it's kind of interesting in a investment thesis way looking backwards. There's probably an investment thesis of saying, what were all the dot bombs that scaled and just investing in that same investment thesis again. And, if you look at, DoorDash or Instacart and say, what were the DoorDash and Instacart analogies of Webvan and Cosmo?
Right.
Nothing new to see over here, right? So, what was a ticketing version that didn't really work then? Well, StubHub, which is around again after its long, torturous journey. We're investors in SeatGeek, which we think is, 10 times better than StubHub, but it's the same thing. So that was an interesting moment, and it's a useful thing to fast forward to today. I think for a lot of the, I'll try to make it contemporary, a lot of the AI forward stuff. One of the things I experienced this morning as an aha was, which I already had experienced multiple times, but it sort of crystallized for me. I think online customer support is done. I think it is now an AI thing. Now, I think the customer support software infrastructure that provides AI customer support infrastructure for companies is very compelling. We're fortunate. I'll talk my own book here. We're an investor in a company called Health Scout. I think that's leading the curve on that kind of thing. But the simple example would be, I'm writing software again as a hobby. I hadn't written software since the early 90s. I wrote commercial software till 92. And then I think I write books because the tools don't change in the language I got. You get better at writing in English, but I've got reasonable mastery over it. At least I think I do. But the coding environments, the tooling, it was just changing too fast for me to be able to do it as a hobby. Well, today I open up Cursor and I have Linear as my thing running, and I keep track of what I'm doing. And with Claude Sonnet and with enough rules and enough configuration around my Cursor infrastructure, I can actually be reasonably productive at doing stuff, and it's pretty fun. One of the things I find interesting and challenging is the difference today between Claude and OpenAI. We'll see what happens when the next OpenAI GPT model releases, but Claude is substantially better than OpenAI at a bunch of stuff on the coding level once you get the environment configured correctly. Both of them make mistakes. And one of the problems, of course, is if you ask it not artfully for information about something, it doesn't give you necessarily the most current answer. Even if you ask it to give you the most current answer, it isn't really woven in yet to that where it's something other than searching the web for the current answer. If you go search the web for the current answer for something, you still don't really get the current answer. If you go to the doc page for the thing and you give that URL to the Claude or ChatGPT or Cursor, it will read that doc page, and then it knows what to do exactly. And then if you map this to customer support, and I think WordPress.com has done a pretty good job of this, and you have an actual problem and you bring up the little chat window that's now ubiquitous in customer support, and you give it your specific problem in your specific context, it does a pretty good job of actually answering your specific problem in your specific context with the most recent information and telling you what to do, versus pointing you to something that clearly is an FAQ or clearly is a discussion board or clearly is their database of support issues. And so like this analog of pre-internet bubble, there were a whole bunch of ways that people did technical support. Then you had a whole bunch of things that came out in the internet bubble that were basically online FAQs that you could sort of query in a better way. We were investors in some of those. A few of them ended up being reasonably successful. Then there were these more extensive in 2007 to 2015 online chat systems. Twilio bought one, not Zenefits, the other one, Zen, whatever it's called, became a big one. But these things weren't really good at solving your specific problem. They were good at solving guiding you to an answer. And then when you couldn't get the answer you wanted, you click a button and now you have a call center in the background, just like you have in the 1990s. Whereas kind of this next generation it's all going to be wired together. And that's fascinating to like keep using these points in time as the problem space that's evolving versus and thinking about that from an investment thesis perspective rather than just clicking straight to, oh well, AI is just going to solve this. Well, no, it's more nuanced. There's more there to work on.
Yeah, no, I think you're absolutely right there. I was just thinking about Cosmo. We're an investor. We're an investor in GoPuff. And so like half my battle was getting over Cosmo to pull the trigger on that deal. Like, what are you crazy? Was half my brain. But it does feel like, the technology's there, but it wasn't there before.
Well, there's no questioning it. There's no questioning it. And the economic dynamics. Also, companies like that are evolving very rapidly from the economic dynamics of the pre-COVID downturn, right? So pre-interest rate rise. So many of these companies were built on inexpensive risk-seeking capital,
Right.
completely uneconomic models that were subsidized mostly by venture capital and public market investors, more by venture capital, ultimately by public market investors. But then it turned around, right? Those companies, to be successful long term, actually had to start becoming profitable businesses. And, that changes the underlying economics. I was in a car with an Uber driver recently in Kansas City, and I asked him how long he'd been driving Uber, and he said 8 years. And I said, how's it going? Nice guy. I said, how's it going? He says, it's pretty grindy. That was the word he used. I said, it'd get better or worse, each year. And he says, it's gotten steadily worse every year. Every year it gets steadily worse for me. My economics get worse. The algorithm gives me less compelling stuff. I have more and more challenges. I have to be smarter about what I do and how I do it. So it's more stressful. And at the end of the day, my take home per hour just goes down every year. And, it's kind of like, and no surprise, right? As Uber tries to go from a completely uneconomic model to an economic model.
Right.
And, the next generation is starting from a standpoint of, well, a bunch of those companies learned what to do so they can start in that place in today's environment. GoPuff has a big advantage because they understand, and frankly, they're investors who maybe were part of subsidizing the last wave aren't as keen to subsidize this wave, because a lot of those investors are subsidizing the AI side of the equation.
Well, so there you go. That's it. That's the ticket. Is like you mentioned vibe coding. You're using Cursor. Are you still deploying capital now in new deals, or you're done?
Yeah. Foundry still has we have a handful of new investments to make, maybe as many as 5 new ones, and then we'll have finished making new investments. And, so we're very active still in the market looking around for stuff. And then of course we have, like any venture fund that has a lot of companies, we have a lot of reserves for all of our existing portfolio companies. So we'll continue to do that. And then we have, the same thing for new funds. We have re-ups for new funds, probably through the end of next year that we have allocated, but we're not looking at new per se. On the Cursor thing, the subsidization is really interesting, right? I'm pay $200 a month for the top package now because of how much I use it. And there is no way on planet Earth that I am using less than $200 worth of API costs a month. It's not possible.
It's subsidized. So like, is there a business there?
Time will tell. I was paying $20 a month. That's how I started, because Cursor starts you with $20 a month. And the first wave of using it for a thing I did was a game called Dinostroids, which is asteroids, but with dinosaurs. It's at dinostroids.com. As a child, I was a big asteroids player, so I wanted to play around with something I knew.
Uh-oh, that might go viral.
Oh, there you go. Good luck with that. The fascinating and fun part of it was I never used up my $20 limit. And the thing I've been playing around with, I released this new book, and it's my 9th book. Book number 9, as an author, you'd think you'd have your shit together on all the different things that you have to do the day after the book is published. And the answer is not at all. It was just a mess. And I'm like, I need to solve my own problem here in a better way than emails and spreadsheets. So, as I've been working on that, it turns out to be a fascinating problem. Sorry to use the word fascinating. I guess that must be my word of the day. And, all of a sudden, Cursor is regularly telling me, you're blowing through your limit. You need to upgrade your thing. You're blowing through your limit. You need to upgrade your thing. I played with Lovable. I know it's one of the hot companies right now. And, the amount of stuff I could get done in Lovable for $20 was almost nothing. Like, it was pretty fast before Lovable said, we need another $20, and then we need another $20, and then we need another $20. And so, the amount that these better companies or these companies that have scale are subsidizing things is changing. And I think that, it's part of the ultimate dynamic of what the absolute cost is. I have no insight and visibility into anything behind the scenes in any of the foundational companies. So I have no idea whether they are converging on companies that are making money or diverging from needing more money to subsidize them to continue to try to deal with whatever scale they've got. And as a predictor, no idea. Maybe the user lock-in and scale that these companies will get will allow them to normalize, the economics so they don't have to subsidize things, because the lightweight users don't use it enough that the heavyweight users that they're subsidizing can get away with. But for example, I just saw the announcement, I think it was yesterday, the day before, Anthropic said that for 5% of Claude users, they're going to have a rate limiting thing on it, because apparently people are just running Claude in the background all day now.
Why not? You can have an Uber driver outside your home anytime.
Yeah. So, it becomes a thing where there's understanding it by living the problem.
Yeah.
There's understanding it by recognizing history. And there's understanding it by just thinking about it for a little while. And as an investor that's choosing where they're investing and how they're investing, if you are an investor with essentially either infinite capital or the ability to pull infinite capital in, that model may work. If you're an investor with limited capital, which most investors are, understanding sort of how to think about that in a productive way is pretty important, especially when you get out of the beginning of the cycle and into the middle of the cycle, where now all of a sudden, some of the characteristics around what's going to be a successful business are changing.
So live it, history it. And what's the third thing? You said there are three things.
Think about it. Use critical thinking. Think hard about it. Don't just ask ChatGPT, what should I invest in? And don't just, the cliche about the investor that invests with everybody else, so you're following the herd or not. It's not that. It's not trying to be, the contrarian. It's just think hard, and you're going to make mistakes. The essence of venture capital and the essence of the business we've been in for a long time is more things are going to fail than succeed. And as an investor, I accepted that a long time ago, that on an absolute number basis, more things I do will fail than succeed. And any VC who hasn't accepted that, okay. And any VC that has a track record that's different than that, awesome, good job.
They've only been a VC for a very short period of time.
Well, that, or they're lying, or I don't know, or something else. There was a story in the 1990s. I remember a very famous, successful VC said, that was an early stage investor, said, I haven't had a single company fail. And it's like, that's just bullshit. He was just lying to whoever he was interviewing with, because I happened to be on the board of a company with him that failed. Right. And so, it's kind of like accept a different version of reality, which is that a lot of these things won't work for various reasons. It could not work because of the idea. It could not work because of the implementation. It could be because of self-inflicted damage. You could make a decision as a team, including as a board, about something that causes you to die. It could be something, whatever, long list of reasons. But in, this idea of being a critical thinker about your own investments and what's going on with them and why they're working or not, especially when a category is out of favor, when everybody's like, well, that was, hardware, direct to consumer, anything, there was a period of time in 2020 where every VC said, well, nobody's ever going to go into a store again, so we're going to make D2C everything. And a gazillion dollars went into that. And if you go down the list of those investors who put a gazillion dollars into that, including, we did a number of those, many of those investors, you say D2C, and they're like, nope, we don't do D2C anymore. D2C, you can't be successful. It's like, well, that's not true.
You have to really understand why those models fail, though. You have to really understand, you have to live it, you have to know the history.
Takes work, and it's a lot easier to go hunt the next hot thing rather than think hard about those things, which from a perspective of somebody who, cares a lot about the companies that I've invested in and subsequently developed close relationships with a lot of the founders, I think it's actually a place where the VC industry really is not helpful to founders at mid stages, where you have a lot of founders who are excellent founders, excellent leaders of companies, have built real companies that are now, in the category of a really nice looking house on an ugly block, that cliche, right? Or, a downtown building that's a really good building in a downtown where everybody's left and the buildings are boarded up. And by not being able to say, wow, that's a compelling thing. I'm going to spend some time with you in the company because you've got something that long term is going to be a good business. I think is an error. And there's an awful lot of VCs who just can't or won't do that because that doesn't fit their strategy. They don't think it's going to make the most money. They don't have the patience for it. They don't have the timing for it. And, from my standpoint of having done this for a long time, it's part of the industry that makes me a little sad that so many people talk about how important the founder is and how the founder is the center of the story, but just move from wave to wave of whatever the new hot thing is.
You can change the founder, you can't change the business model. So it's tough. I mean, you mentioned, did you make any investments in the vibe coding arena or?
No, by the time we were paying attention to that category, those companies had already raised money and taken off. My view, having played with them all now,
Yeah.
I think Cursor is a truly amazing company. So like of that list, that one feels awesome to me. Lovable of the rest of the category feels pretty compelling. And obviously they're doing extremely well. But as a user of Lovable, I struggle with getting far enough with them with their pricing model. I used Replit actually before they started doing the vibe coding thing with a training course I just took on programming a couple of years ago. And there's something about Replit that didn't click with me. And then, there's the whole category that everybody's trying to figure out right now that I do think there's real opportunity is the intersection between the actual code layer and the design layer, which, of course, all the design forward companies are trying quickly to do something with. Vercel, just came out with V0. It's pretty cool, but limited. And, you hit the limit fast. And so if you're trying to figure out how to make all the pieces work together, unless you are really good and experienced, or you're able to really spend a lot of time and dig deep, I think there's still a lot of middle space that none of these companies have solved. And it'll be interesting to see whether that gets solved with companies that are existing companies or whether it becomes, new startups. And just the example I give, when I started doing enough where I needed to keep track of what I was doing other than in Todoist, I decided, okay, well, I'll go find the right tool for that. And I'd never encountered Linear before. And after playing with a handful of different tools and asking friends and asking some AIs and then challenging, with what my experience level was and what other tooling I was doing, I discovered Linear. And it has blown me away how good it is. And it's a 7-year-old company that nobody knew about, or maybe people knew about, but nobody talked about, that, is really pretty rapidly becoming an essential part of infrastructure where there were plenty of others that were that infrastructure. Probably the company that's most at risk by Linear is Atlassian and Atlassian tooling and, Jira specifically. And, my long arc of that story is I was an investor in a company called Rally Software back at Mobius, which essentially was one of the first companies to create tools for agile software development, which became successful, became a public company, ultimately got bought by Computer Associates. But, in this period of time, Jira had just come out when Rally was kind of the viewed market leader. And Rally kind of looked at it and said, well, that's a self-serve low-end thing. Nobody's going to pay any attention to that. And the Rally started paying attention to it a couple of years later when they lost a 3,000 seat enterprise customer to Atlassian with Jira, with no sales motion at the time from Atlassian. And, kind of interesting how these waves continue. And there is an element of founders focused on best product, even in an established category, where best product has something to do with the way the user and the customer engages with the product, not the thing that's been working for the last X years. And I think in this wave of AI forward companies, that's going to be an important thing because you're going to have, in the way that, PLG became a thing. Well, PLG was just a fancy word for freemium, the evolution of freemium. SLG is just a fancy phrase for having a sales organization. So we keep making these new things up. That's fine. But, how does the dynamic change when, the organization itself is operating in a different way because of the way the tooling is evolving, and just understanding very precisely how that works with AI, I think it's a big wide open space for people to play around with. It's definitely in the category of, is that solved? The answer is no way.
With 5 more deals left, I'd be a little like, I almost can't see you sort of like going cold turkey and being like, I don't need to invest anymore in new opportunities. And you think you can stay away?
Who knows? But I mean, when I describe the dynamic of it, right, from a fund perspective, we have 5 more deals. So, who
Well,
knows?
yeah. No, I get it.
I have plenty of exposure to new things at very early stages because of the 50 funds we're invested in, because of the hundreds of companies a year Techstars invests in.
Yeah.
Yeah, I'm on the Techstars investment committee, so I see all the companies that go into the accelerator. I'm part of deciding that, and it's really, really interesting to see at the pre-seed, or accelerator stage, what people are working on and how they're defining what they're working on. And I put this in that category. I think a lot of people have shifted from, we're just going through our selection process for the next program. I think a lot of people have shifted from, or founders have shifted from slapping AI on shit to actually thinking pretty hard about how the existing LLM infrastructure, which is what AI is, can be incorporated in different ways into different types of horizontal and vertical applications. And it's not just that it changes the efficacy of the application, but it changes the entirety of the way the end user interacts with the application. We've already been through the first part of that, right? Every application now has an AI assistant, and the AI assistant theoretically is supposed to help you. And some of them, AI assistants, are actually quite helpful. And when I was in Sheets the other day with an existing sheet, and I said it to alphabetize a column for me, it didn't just alphabetize the column, it made up a whole bunch of names that weren't in the column and put them in alphabetical order. And I then had to say, alphabetize only the names in this column, and it still did it. And then I had to select the area, and I said, only alphabetize the name in this range, and then it did it right. I'm like, come on. Like, so there's still a long way to go before all those things have clicked into ink. So that's Google's bad at it. I don't think so. Like, I mean, I had a different problem recently in OpenAI where it just made shit up. I had another problem in Claude recently, which I blogged about within the last 30 days, where it just made shit up. And it wasn't just made shit up because I had my prompt wrong. It then continued after I challenged it with what it made up. Like, where did you find this? Well, I found this at this link. You click on the link, you get a 404. You're like, are you sure that's the link? Oh, I'm sorry, I got a 404. Here's a new link. And the new link is wrong. And then I look at it a little harder and I say, hey, are you sure that's a real link from the internet, or are you just making up a link? Oh, I'm sorry, you're right. I'm just making up a link. So we got a long way to go. That stuff's getting better fast. And so my hope is that, that type of hallucination doesn't have problems. Somebody could give the counterexample of the Grok release that immediately became anti-Semitic, right? Like, that's just, we're living in garbage in, garbage out, and tuning the models. And so when you take that and put it against real data inside your organization, unless the container is something more than a generic container, oftentimes those things are not very effective. And when your workflows change or the way that you approach work changes, it may mean that the application you were using is not needed anymore. It's totally obsolete. You need a different approach. And I think that creates a lot of white space for stuff.
Amazing. Well, Brad, this has been a phenomenal podcast. I feel like I'll have to go back over my notes here just to pull out all this
Or
stuff.
you can just feed the transcript into an LLM and say, what smart things did Brad say and what stupid things did Brad say? And it'll give you a nice table, and I'll have a table with bullet points and like some green things and some red things.
I've got my granola rolling in the background, so I'll consult with that. But this is amazing. As a last question for you, what is the one thing or two things that you wish you knew when you started venture capital in your venture career, but you know now? What is it like what you wish you knew when you started?
When I started, I wish I knew how to more effectively challenge a more experienced person than me when I thought they were wrong. It took a long time to understand how to be effective at that. I also wish I understood how much the cliche talking your own book applied to VC. And I wish I understood that the phrase pattern matching was one of the worst phrases that somebody could use. Because what I didn't really understand in 1996, 7, 8, 9, and then got caught up in was how much the momentum and the thing that everybody was doing that was a self-reinforcing loop of something that was apparently working because prices were going up and the public markets were buying, were things that were not very smart things to do. And it wasn't necessarily even me talking my own book. It was people more experienced than me, not saying, hey, what are we doing here? And I remember one moment, I remember a board meeting, I'll end on this, a board meeting with Len Fassler. And Len said to me, some version of this was a company of ours that was growing like crazy. It's called Interliant, went public. It was worth over $3 billion. And then it went bankrupt 2 years later. And this company was extraordinary at losing $5 million a month. I mean, we'd really mastered the art of that. Yeah, we grew to a significant business. We were a $200 million company. And after a board meeting, he said to me, Brad, we're screwed. And, the stock price is going up and the business is doing great. I said, what do you mean? He says, we are losing so much money. There's going to be some point at which we can't lose this much money anymore. And I said, yeah. I mean, I sort of listened, but I didn't take it seriously. And I remember him saying, we gotta do something about this. Like he used to pound on the table. We got to do something about this. And we just couldn't. The conventional wisdom was so against it in that moment. I wish I had been better at understanding how to listen and ask those questions in those moments and interpret the information through a fresh lens rather than the lens that everybody else was using.
Well, we could go on for like another hour or so, but I know you need to go.
My pleasure. Fun questions. And you took me to an interesting place. So hopefully it's useful and interesting to the listeners. Anybody that's still listening, I hope this was useful to you. And if not, sorry for wasting an hour of your time.
Brad Feld, legend. Thank you so much.
Thanks for listening to the Driving Alpha podcast, where we host top investors to demonstrate how they outperform the market. Click subscribe so you don't miss future episodes. Driving Alpha is supported by Affinity, provider of the CRM for the private capital relationship economy. Affinity knows who has the best relationship with the right startup. Affinity knows. Learn more at affinity.co/driving alpha.